Indian rupee continues its downward trajectory on Thursday, hitting a record low of 85.76 against the dollar as of Thursday, surpassing its previous closing of 85.65. In an effort to stabilize the currency, the Reserve Bank of India intervened by selling dollar at 85.78, momentarily strengthening the rupee to 85.67 during afternoon trade. However, the rupee weakened further, closing at a new low yesterday. Traders reported state-run banks selling between $800 million to $1 billion to further control volatility. Despite these measures, analysts predict the rupee could fall further to 88.50 per dollar by December, which it has by December due to declining foreign investments and weak exports. It is expected to be a year where rupee is going to remain low. In fact, it is predicted that rupee will enter 88.50 against the dollar by December of 2025. Kranti Bhatini joining us this morning. Kranti, good morning. Very happy New Year to you. I want to begin by asking, what are you making about the volatility in rupee? RBI is trying its best to control the volatility, but despite that, rupee continues to weaken. Now, there is a debate on whether it's good or bad for the Indian economy. Your thoughts?
Shweta, good morning to you and a very, very happy New Year to you and all your team at News9. And yeah, the rupee has been depreciating in the past 3 months and now currently at all-time high levels, breaching in fact 85.50 levels also. What we can sense the reason for this kind of uh, consistent the depreciation in the rupee is the kind of FPI outflows what we witnessed in the past fortnight has been creating some kind of extra pressure uh, on the rupee. But in fact, some extent it is good for the exporters. But as an economy, we need to have a strong rupee going ahead. But yeah, it's a kind of a knee-jerk reaction in the medium to short term because of the perceived um, and consistent outflows from the emerging markets, and also dollar has been getting strengthened across all the emerging market countries. It's not the only rupee got depreciated in the past 1 year or 6 months, if you see, but the dollar has been appreciated among all the currencies across the emerging market. In fact, if I have to compare the relative performance of the rupee has been done extremely good when compared to the other countries like if you have to compare with the N and also the other BRIC countries are concerned, the rupee has been showing its strength. But it is at an all-time low level at this point of time. But after the new after the Trump got elected, some kind of dollar strengthening, what we witnessed in the medium term. But two reasons I can pursue at this point of time. One is the sustained outflow of foreign portfolio money, and also the dollar getting strengthened across all the emerging market companies. These are the reasons. If the persistent FPI flows remains continued in the next coming weeks also, we can expect some kind of further weakness. Or else, if the FPI turns positive and if the FPI inflows improves, we can see some kind of consolidation in the near to short term. So currently, I can say it's at an inflection point.
Rupee at an inflection point, but before we move on, are you expecting the FPI flows to really come in favor of India going into 2025? What's your outlook there as far as foreign portfolios is concerned?
As for the foreign portfolio investors are concerned, we are quite optimistic as we resume our growth territory. The first half of the year has been some kind of slowdown in terms of the pace of growth is concerned. But during and what we witnessed in the 2024, nearly for a tune of more than $60 billion of foreign portfolio money has exited from Indian markets. But thanks to the retail flows and also the domestic institutional investor flows, we could be able to absorb this kind of selling. But coming to 25, as the growth shift, the pace of growth improves in the year, there are some FPIs which are long only India funds. They have been waiting to enter into Indian market. So we can see some kind of improvement, most probably from the second half of the year. But it's early to say. But definitely in 2025, they're going to turn positive towards Indian markets.
All right, some sort of positivity expected there towards the end of, or the second half rather, of 2025. But another story which is now coming to light, given that this is the time around budget. Now, India's Finance Minister Nirmala Sitharaman on Thursday met with stakeholders from financial sector and capital markets for a crucial pre-budget consultation session. The meeting, aimed at gathering inputs ahead of the upcoming national budget, also saw participation of key officials including Finance Secretary and Secretaries of Department of Economic Affairs, Financial Services, as well as Chief Economic Advisors of the government. Remember, as a part of the annual process, the Finance Ministry regularly holds consultation with industry experts, economists and state officials, as well as leaders to inform the formulation of the budget, to really know what the expectations are. Some are included, some are not included, some are met. That's obviously the way budgets are made. But Kranti Batini is here, so let's quickly understand what are the market expectations. What is the financial market expecting? I think, on the back of our hand, I think there are a few expectations that all of us can really talk about, and that is some sort of turnaround as far as financial markets is concerned. I want to know from you, does India as an emerging market today looking as lucrative as it was in 2024, Kranti? And if not, what can the budget really do about it?
Shweta, see, is the usual regular process of any finance minister to meet the departments and also the industry body to understand their expectations from the budget. And the one thing we need to ponder upon is the last budget, which was announced after the post-election, was an interim budget. For the current government, uh, this is the first full-fledged budget what the finance minister is going to present yeah, for the entire financial year is concerned. So there are obviously there are some kind of expectations, high expectations from this budget. So the expectations on this budget is very high. And what we witnessed in 2024 was some kind of slowdown of growth in the first half of the year. We had the general election and also some kind of erratic monsoon, and which has clearly impacted the growth, and also the capex is at a very slower pace. If you see the first half of the year, we could able to the government could able to achieving 65% of the capex as per the budgeted capex is concerned. So the pace of capex has been at a very slow pace, and the we can see some kind of softening of the domestic consumption, and also the GDP is concerned. Coming to the financial markets, the stock market, expectations from the budget is very high. We need to see how the capex is going to go up, and also what kind of reforms. Okay, the pace of reforms, the expectation is very high. And also the other hand is the parliament is pursuing, the government is pursuing one nation, one election. So if that going to get finalized, so the tenure of the government might be very short. So every budget from here onwards, it is extremely crucial. So the pace of the growth is extremely crucial, and also meeting the expectation. We are still getting the feelers on increasing the domestic consumption, reduction of some kind of income tax, and also with the Trump at White House right now, he is going to give some kind of most relaxing incentives to the industry. So as an emerging nation and as a nation, currently India is focusing to improve the domestic growth and attracting India as one of the major hub for the manufacturing. Right now, the kind of incentives what the new administration in US has announced to attract the investments back in US, okay, we need to match that pace in terms of the incentivization and also in terms of the taxation is concerned. And while coming to the taxes of capital market investing is concerned, there should be some kind of rationally expectation. That's what the market has been anticipation, because we do have so many taxes in terms of investing in India is concerned. One is the short-term capital gain and also long-term capital gain. The parity has to be market has been anticipating, where the long-term has been increased to short-term has been increased to 15% in the previous budget. So some kind of announcement, the parity the market is anticipating, and also any kind of there is a long pending expectation from the budget that is about STT, the security transaction charge. So there are too many charges: security transaction charges, stamp duties, and also the GST. So many of the taxes are there. So is there any kind of rationalization? This is the expectation from the capital markets with respect to the taxation is concerned. Of course, obviously, the reform agenda and the capex always there from this budget.
All
So
right.
we need to wait and watch the expectation. Even the recovery in the market currently is one of the reason is the expectation of the budget is very much high right now. That is one reason for this kind of recovery in the market also.
All right.
So whether it's the pre-market, pre-budget rally or not, we need to see.
Okay, we'll need to see whether it's pre-budget or not. But stay on with us, Kranti. Another important story which is now coming out is from our Labour Ministry. Now, Labour Minister Mansukh Mandaviya stated that employment in India saw a remarkable 36% increase, rising from 47.2 crore in 2014-15 to 64.3 crore in 23-24. The minister credited the improvement in job creation to policies of the Modi government, contrasting it with UPA government's performance. Now, Mandaviya highlighted that under UPA administration, employment growth was a modest 7% over a decade, adding only 2.9 crore jobs. In comparison, the Modi government reportedly created 17.2 crore jobs between 2014 and 24. The Labour Minister also pointed out that agriculture sector employment has also declined by 16%, had declined by 16% under the UPA government, whereas under the current government, it has seen an increase of 19%. Whether those numbers will persist, sustain, we don't know. But let's take a view of Kranti Batini. Kranti, I think one of the conversations, obviously, in 2025 will also be how investment cycle has slowed down. Corporate earnings are not looking very good as far as second quarter is concerned, not looking very good for the third quarter also. That is what analysts are predicting at the moment. Capex cycle has also slowed down. All of these factors are not going to augur really well for the job market.
Yeah, some kind of softness in the economy, what we witnessed in the first half of the year. Of course, general election and also the erratic monsoons were the one reason for some kind of slowdown in the growth. And as you rightly mentioned, the capex has been very smooth, and there is government would able to spend the budgeted allocation in the first half of the year. But comparatively, what we can sense at this point of time is the Q3 can be a better quarter comparatively with the Q1 or Q2. So that's what our anticipation is at this point of time. As for the job data is concerned, Shweta, uh, uh, this has to get sustained. That is crucial for the markets and also crucial for the economy. Uh, One thing is, in the initial phase of this, the Atmanirbhar Bharat and also Make in India, it was at a slower pace. But right now, the momentum has been what we are witnessing is it is picking up, which is creating the good number of the employment data what we are witnessing, and also the technology-driven jobs. Okay, the new entrants in the recent past. Okay, they are also providing some kind of a employment at the bottom of the pyramid. So by and large, what we can sense at this point of time is, okay, whether the data has been good, very quite encouraging, but the other data what we need to look at is, okay, what kind of the wage growth that's what we are witnessing. That's also important, and also the suitable employment. Okay, if there is a improvement in the bottom of the pyramid, that's good, but the suitable employment also, the skilled sets also need to be employed. It's a regular process, Shweta. We cannot argue, or we cannot interpret these numbers at a single number, because as a young nation and also as a larger nation, this data has to be interpreted in a very micro way. But by and large, it's a good number, and if these numbers could able to sustain and move further, okay, it will definitely add the uh, improve the domestic consumption is concerned, because we also witness some kind of the pace of consumption also
Right.
slow growth that has to get improved with these set of numbers what we are expecting. If the numbers are sustained and move further, that's positive for the markets as a whole.
All right. Well, there'll be all eyes on what the budget brings in by the way of perhaps more capex. And not just that, I think given that last year and 2024 was largely an election year, maybe that's one of the reasons why capex spending was slower. Perhaps 2025 will be a turnaround. We'll have to wait and watch. Kranti Bathini, always a pleasure. Thank you very much for joining us.
Thank you, Shweta. Always my pleasure to share my views with you and with all the viewers of News 9.